If you owe the IRS money and you're completing a Form 433 on your own, I would say be very careful because how the IRS is going to interpret the information you provide to them on the form could be the difference between you qualifying for a reasonable payment plan or the IRS deciding you can afford to pay a lot more than you actually can. And so I'm going to explain that today. I'm Bob Jablonsky. I'm an enrolled agent and a tax resolution specialist. I've been working with taxpayers who have IRS problems nationwide now for over 20 years. And what I would say is be aware that if you owe the IRS money, you're often going to be asked to complete that financial document. It's a Form 433. And what you should be aware of is that information you provide to them on that form is going to be used by the IRS to determine what you can pay to them. And here's the problem. Many taxpayers, they're not going to understand how the IRS will interpret it. Their method of interpreting that information is much different than what the IRS interprets it as and what the IRS believes they can pay. So the form is going to be a Form 433. And if you're calling the 800 number with automated collections, it's going to be 433F. You're typically going to be giving them the numbers verbally versus the form itself, but you're going to be giving them the information. If you are working with a revenue officer with your own personal debt, it'll be a Form 433A, which has a lot of the same information, but goes into a bit more depth than the 433F. And if either side, if you have a business debt, it will be a Form 433B. They're all going to be requesting information on your assets, your cash flows to determine your ability to pay the government. And it's very important as to how the IRS interprets this. How they interpret it will determine whether they think you can fully pay your tax debt, or whether you may qualify for a C&C, currently not collectible, a partial pay installment agreement. Your categorization is going to be based on what information you provide to the government. Now, the government may not take everything you give them a verbatim. They may request bank statements to document certain things, or they may require proof of expenses and so on. But at least this is your starting point. You're going to be providing your equity and your assets. They are part of the calculation with an offer in compromise. They're not directly part of the calculation for payment plans, but they could impact what the IRS is going to allow you to get into or not get into. So they are important. But on the cash flow side, there's the two sides. There's the income side and there's the expense side, right? With the inflows of your cash flow and the outflows. So on the income side, you have a W-2. If you're a W-2 employee, it's pretty simple. You know what your income and cash flow, and your pay stub will usually show your payroll taxes withheld, any amounts for insurance, health insurance, and so on. If you're self-employed, it's a different story. For example, I work with a lot of real estate agents. Those real estate agents, they're not usually making the same amount every month, right? They may have 3 deals one month and then no deals for the next 3 months. So if you gave them your information from last month, particularly if you just closed those 3 deals, you would be grossly overstating your income and what the IRS would determine is your ability to pay. So you might want to look at your self-employed income over a 3 month period, a 6 month period, a 9 month period, a 12 month period to see what is honest and you're completing this form truthfully, but is to your best benefit. Now, the expense side, when they complete their Form 33 with actual expenses, it really looks like they have no cash flow, right? They have no money left to pay the IRS. But the important part is if you look to the right, there is a column where it talks about the IRS allowed, the allowable amounts for the IRS in each of those categories. So you may have X amount of expenses, for example, for your housing expenses, but the IRS is going to look at your family size in that county to determine what the maximum is that you should be allowed. So what my clients think they can afford to pay is absolutely very different than what the IRS believes. And that becomes a real problem because you get through the end of the month, like for example, they have $8,000 in monthly income, they have $8,000 in expenses, but the IRS looks at it and they only have $6,000 in allowable expenses. The IRS believes they have $2,000 left to pay them each month. That obviously is not going to work out well, right? And it's really important when you provide the information, you understand what you're giving them, right? You want to be truthful, but you also want it to be in your best interest. And something to keep in mind is many of the expenses have limitations. They have allowable expenses. Others generally don't. For example, what you pay for health insurance for your family, that is generally not going to be limited by allowable expenses within reason, or your out-of-pocket health care. You have some member of the family that requires expensive prescriptions each month. Those are generally going to be allowable. They're for the health and welfare of the family. So having it in the right category can also be critical for you as to how the IRS interprets it. So be very aware of that. Also, sometimes if you exceed the IRS standards, they may still be allowable if those are expenses have a valid reason for the health and welfare of the family. Not just because you wanted to treat your children better, but perhaps somebody needs a special diet medically and so on. So completing that form and understanding how the IRS interprets it is just critical. So to wrap this up, I'm not saying taxpayers should never submit a Form 433 by themselves, but before you submit it, you should understand very clearly what these numbers mean to the IRS and how they're going to interpret them. If you don't, you might get a really, really big surprise out of it. So be very careful with what you're giving them. Um, if you need some help with that, I'm going to leave a link to contact me, both in the pinned comment as well as the video description. You can always reach us at 972-821-1991. And if you found this video helpful, please like it so others will watch it. And feel free to subscribe to the channel so you can continue to get some more good information on how to resolve your IRS problem.